Hello everyone, and welcome to Tanks Invest. Talk about investing, finance, and professional development. For today's items only, the investment top today will be Ethereum ticker ETH. First, just want to say happy Wednesday, everybody. Hope a great week so far. Respect to Ethereum, it's a recording of 9:01 a.m. on Eastern Time. Current trade $3,154, down about 0.70% so far. It seems that we are cooling off ever since the surge that we experienced hitting to the all-time recent high, right, the 3,379, and now we're testing back to the comfort zone, which is the cushion that we identified in the previous technical analysis, the 3,150, right? In respect to the media front, we have a collections of, relatively positive slash neutral news, if you may. Number one coming from Coinbase 2 hours ago, talk about Ethereum emerges from Bitcoin's shadow. Obviously, this is something that's prominently displayed on the market, knowing the fact that Ethereum has been surging in a percentage perspective higher than Bitcoin, despite obviously the price differentiation. And another one talking on Cointelegraph 2 hours ago, talk about Ethereum community events called AFGHAN coming soon. And this time it's organized online. In respect to this event, I did check the date. The event's basically durating from Thursday to Saturday, per the notes that I've seen online, which is somehow correlating with the Jackson Hole speech that we'll be hearing from Jerome Powell. So it'll be a relatively volatile couple of days ahead of the, as we're shifting towards the weekend. So that's something we have to be mindful of, right? I think AdCon is should drive some sort of a positive catalyst, but also at the same time can be anti-correlating with, if Jerome says anything specific on tapering or quantitative tightening in the foreshadow future. Obviously, will drive some sell-off across the crypto market, but also on the equity market at the same time. So something we watch out for, right? Another one talked about on Fortune magazine 4 hours ago, talking about the rally that we've been experiencing on the tech side, right? As we have seen across the spectrum for a lot of the technology stocks and growth stocks specifically have been, surging. And this is a sign of sector rotation among hedge funds with some, public investors chasing in at the same time, lifting the global market as a whole, knowing the fact that tech is a big composition of the entire market as a whole, right? And then the next one is talk about the NFT sales, basically regurgitation news on setting a records, knowing the fact that it's a lot of popularization, commercializations for Ethereum-based NFT recently, and the verbiage is quite interesting, right? They are using verbiage specifically to describe NFT as validating, accelerating, which is interesting way of explaining these type of artistic creations, if you may. And then another one is a regurgitation with respect to the Kraken's donations of $250,000 in advance of Ethereum 2.0 blockchain upgrades efforts, which is another great for the long-term value proposition. And then another regurgitation 21 hours ago talk about with respect to, as we know, right, CNBC released a report talking about some of the hacking activities and people losing their money in their accounts on Coinbase and the malfunctions that we've been experiencing so far, me personally as well, right? So that drove some sell-off. But with respect to technical analysis, we're looking at it in front of us right now. It seems that we're forming some sort of like a head and shoulder type of formation, on top of the fact that RSI is still relatively highly overbought. We have crossed recently, so this is still in a bearish sign. And on top of the fact, if we always follow the cheat sheet, right? Doesn't it look kind of similar to what we're looking at right now? Obviously the peak is not as severe, but it is comparable to what we're looking at right now. I think despite the peak, how differentiated it is, we have still surged up for a relatively long time now. So we hit the paradigm. I think the paradigm was there already. If you look at the top 3,379, and we're basically cooling off right now. We might see another surge just to match with the head, with the shoulders. So if we have like a big head and then two small shoulders, that's a really negative sign. Oftentimes I've seen basically historically, whenever we see that type of formation, it's always been negative. we always see a sell-off imminently and promptly at the same time in the next couple of weeks or so. So ideally, $2 cost average, I would be staying away from the current level right now. I would probably wait until 3,000. But for me, I think we will have to go through the entire cycle to hit fear and capitulation, and subsequently to return to normal, right? And continue and basically refresh the whole chart to start from the stealth phase and the awareness phase and then mania phase again, right? So something to be mindful of, again, 3,000, 2,750, 2,450 would be a level dollar cost average at, knowing the fact that the chart is still in hold and the head and shoulder formation is definitely worrisome. So just to recap on numbers and technical analysis, 3,000, 2,750, 2,450, 9,800 is a long-term price target, basically next year by June or July, right? And that's 3.3 times your money from here. So if you want to buy now, have some risk exposure, that's up to your risk aversion, up to your risk tolerance, right? So hopefully this is helpful. And this is my quick update. Really appreciate you for dropping by. And feel free to give me a shout if you have any questions, right? And stay tuned for this coming up. Take care. Bye.